Hello, everyone. Hello, Finimizers. Welcome to another Finimize live event. I see the number of participants rising, so let's just wait a few seconds so that everyone can actually connect. Cool. I see this is rising fast. That's a very, very good sign. I'm very excited about this session, to be honest. Okay, I think we can start. So my name is Stefan. I'm an ex-portfolio manager and now analyst at Finimize, and I'm very happy to host today's event on how to build your ISA portfolio with our partner IG. So today we kick off the first part of our ISA season event series. And it's just in time for anyone itching to get a head start on the UK tax year because it's starting on April 6th. So in 2 weeks, I think. Over the next 2 days, we're going to dive deep on ISAs with some hands-on tips and guidance to really empower you on your investment journey. So, whether you're just stepping into the world of investment or looking to beef up your portfolio, or you just want to make decisions with a bit more confidence, now is the perfect time to start. So let's do this. Let's get financially prepared for the upcoming fiscal year. Before we actually start, let me just run through some housekeeping rules. As you're coming in, please fill out the poll. It should appear about now. Feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. It's going to be a 15-minute discussion followed by a 15-minute audience Q&A. And please make sure to use the Q&A box to ask a question, not the chat box, the Q&A box. And if you see a question you like, you can just upvote it so it moves to the top. And that way we can get through the most upvoted questions first. All right, so let's kick this off. So our event partner today is IG, a leading retail trading and investment platform, providing individuals not just with the products, but also with the insights and analytical tools they need to access opportunities in financial markets. I think there's a link that should appear on the chart. Make sure to check it out to learn more. And with IG, you can expect an easy-to-use platform, expert trade ideas, and a massive, massive investment universe, as you can trade more than 17,000 markets with spread bets and CFDs, or you can also invest in thousands of global shares and ETFs. Just remember, your capital is at risk. 69% of retail investors account lose money when trading CFDs with this provider. So, you just need to make sure you consider whether you can afford to take the high risk of losing your money. Today, we're very fortunate to have Aaron Bright. Aaron joined IG in 2022 as an assistant portfolio manager of IG's smart portfolios. Prior to that, Aaron worked as a multi-asset investment analyst covering stocks, fixed income, and alternatives, and was responsible for generating recommendations for investment portfolio. I think it's fair to say we're in very, very good hands with you, Aaron, today. So how you doing today first?
I'm very well, thanks. How are you, Stefan?
Good, very, very good, very excited. Cool. All right, so let's dive in. Let's set the scene, Chris. Aaron, what's an ISA? Why does it exist? How does it work? What are the different types? Maybe you can just give us kind of an overview, please.
Yeah, absolutely. Thank you very much for having me on, firstly. So an ISA is a type of UK investment wrapper, tax wrapper. So when I first learned about ISAs, someone actually gave me a very good analogy. Think of a bag of sweets, and the ISA is actually the wrapper outside of the sweets. So it doesn't actually constitute the investment. The sweets inside would be your investment in this example, but the ISA sort of encompasses it and it sort of overlaps it, and you can put the investments inside of it. Introduced in 1999 as a way for investors to have some kind of tax-free savings vehicle in the UK. There were things called PEPs, which predated ISAs, but ISAs was one of the big campaigns from the government at the time to push tax-free investing. And anything inside an ISA is tax-free. So there's a number of types which are offered by the UK government, and various different financial companies operate them. You've got the stocks and shares ISA, which you can put stocks and shares, funds, ETFs, investment trust inside your ISA wrapper. You've got a cash ISA, which is essentially, think of that as almost like a savings account, but any interest income is there's obviously no tax on that. So the ISA wrapper protects that from any kind of tax on any interest earned. You've got a lifetime ISA, which is sort of a unique type of ISA. You can put £4,000 a year in it. With the others, you can put a maximum of £20,000 across your ISAs. In the lifetime ISA, you can put 4,000 a year, and the government will give you £1,000 a bonus, so 25% if you max out that 4,000, and that needs to be used on either retirement, age 60, or a house which is £450,000 or less. And if you don't meet those requirements when you use the money, you can get a 25% penalty. So it's important that you follow the guidelines for that. And then the last type of ISA is the innovative finance ISA, which is quite a risky product on the whole, and it's mainly used for sort of peer-to-peer lending, and it's not something we offer here at IG.
Thanks a lot. And how exactly does it work? Like you can actually put money on an ISA once a year, or how does it work?
Yeah, absolutely. So you've got a £20,000 limit per year. Every individual has that, and you can put £20,000 across all your ISAs. So at the moment, you can only put £20,000 in, say, one stocks and shares ISA. You can't split that between multiple stocks and shares ISAs at the moment. So you have to be in a specific type of ISA. But you can split that across, say, a stocks and shares and a cash ISA. You could put 10,000 in one and 10,000 in the other. In the new tax year, the Chancellor Jeremy Hunt's actually changing the rules, so you can open multiple stocks and shares ISAs or cash ISAs in a tax year, which is quite exciting for investors if they want to diversify what they can invest in. But yeah, absolutely, you just put the money in, and in a stocks and shares ISA, you can buy stocks, shares, funds, ETFs, or model portfolios such as IG Smart Portfolios, which is multi-asset investment portfolio, which I co-manage. And in a cash ISA, you'd essentially be putting it in a savings account, but all the interest earned would be protected from tax inside the ISA wrapper.
Awesome. And there's one type of ISA that looks pretty cool. It's called a flexible ISA. So maybe you can just give us a bit more detail about those.
Yeah, so a flexible ISA is actually not a specific type of ISA. It's actually a characteristic which a cash or a stocks and shares ISA can have. And essentially, as the name suggests, it just makes them flexible. So as I said at the beginning, you have £20,000 per year to put in an ISA, and this can't be carried forward at the start of the new tax year. If you don't use it, you'll lose. You can't have 40,000 in the next tax year. It's gone once the tax year is over. But with a flexible ISA, let's say I had £20,000 in an ISA, fully used it in a tax year, and in the same tax year, I thought I actually need that money for something else. I could take some money out and then replenish that money within the same tax year. So it wouldn't be new money, it would be replacing the same amount of money I withdrew in that tax year for the same ISA. So, if you put in £20,000, you could take out 10 and then put that 10 back in. And even if you put 20,000 in at the beginning of the tax year, it wouldn't be like putting 30,000 in. It's just replacing that money that you've taken out and used for other circumstances potentially that you've either needed outside of your ISA environment, or potentially an opportunity that you found outside of the ISA environment, but you can replace it later on, which is a really useful thing.
No, this sounds really cool. I don't think those existed when I was still in London and had an ISA. I remember it was not that flexible. So are there any specific investment types or strategies or assets that you would say are particularly suited to being held in a flexible ISA?
Yeah, I mean, I'd say it's really a personal opinion for the investor. So, for example, our smart portfolios, an investor will take a risk profile questionnaire, and they can invest in multi-asset portfolios within an ISA, ranging from our least risky one, which is a conservative fixed income and cash portfolio, all the way up to an aggressive, very equity heavy portfolio. So they're all sorts of things that you can invest in an ISA. But for some investors who have really low risk tolerance, they may find that a cash ISA might be suitable. So it's really, whatever the investor fancies, they can, invest that inside the ISA wrapper and make use of the ISA world and the tax-free benefits, no capital gains tax, no tax on dividends, and no tax on savings income or savings interest within the ISA environment. So whether it's stocks and shares, funds, model portfolios, or they wish to remain in the cash environment, it's ultimately very useful to put it in the cash into the ISA environment to save that tax bill.
Awesome. So how could retail investors take advantage of those ISAs? Any particular tips or recommendations?
Yeah, ultimately they should really assess their time horizon, their risk appetite, and apply those to whether they should see fit for an ISA. If they need the money really quickly, it might be sensible for an individual to invest in a cash ISA, and then they could potentially make use of the flexibility benefits if they need to make liabilities, essentially using it as a form of easy access savings account potentially. Um, and a risky investor might wish to buy stocks and shares, funds, ETFs, or even trade in an ISA if that's their plan. If they want to buy and sell stocks in an ISA, or long term hold stocks in an ISA, they can buy and sell all sorts of things within the ISA environment. So it's a really useful tool for retail investors to avoid that sort of tax. Um, the CGT and the dividend tax and various other taxes which are applied to investors.
So actually, you made a very important point, because I think a lot of people see those ISAs kind of, a tool for really long-term passive investors. Just put, some money there, and just keep putting some money and invest for the long term. But actually, also thanks to their flexibility, if you're a trader, actually there's a really strong advantage, right? Like whether you want to invest in more speculative stocks because you don't have the capital gains taxes, or even if you have kind of a strategy that leads to more kind of turnover and more trading cost because you don't pay on this kind of cash, it could also be actually a pretty good tool for kind of traders, right?
Yeah, I mean, I'm not regulated to give any financial advice here, but because of the no capital gains tax inside of an ISA, if an investor buys a stock and it appreciates very quickly and they make a huge capital gain in the ISA environment, in a stocks and shares ISA, and then they sold that, yes, there wouldn't be any tax. So it would be very, very useful for that sort of investor, to utilize the ISA environment if they were making a huge capital gain or they were buying a stock with a really chunky dividend, where there'd be no taxes on that. So yeah, it can be very useful for that. But yeah, and also, you know, the same can be applied for long-term investors as well, who hold a basket of stocks, a basket of funds, a basket of ETFs, whatever it may be, and they appreciate over the longer time. There won't be any tax on those. We actually did some analysis at the beginning of last tax year, oh no, the beginning of this tax year, and we assessed Rio Tinto. So we had a look at how that stock performed from 1999 to 2024. So from the beginning of when ISAs were invented to this year, and we wanted to see how much of a difference investing long term in an ISA, buying a stock in an ISA would help and would save you tax. So the return, we applied today's capital gains tax rules, so not throughout time. So there's a little bit of estimation here, and we applied today's dividend tax rules and allowances. And the return with dividends reinvested of Rio Tinto from 1999 to 2024 was around 2,000%. If you'd held that outside of an ISA, the actual gain would have been 28% less because of the taxes applied on capital gains and dividends. And your dividends would be smaller because you won't be able to buy the stock back if you're being taxed on the dividends as well. So we did some analysis and we did it across a few different stocks, and yeah, the evidence was between 19 and 30% less, the final value outside of an ISA. So it just showed to us, the evidence of saving the money on tax. You're much better off. That was based on a £20,000 purchase of Rio Tinto in 1999, and following the price throughout the time. And yeah, it just showed that the difference was massive. And I think the tax bill at the end, we calculated it was something over 100,000. So really significant amount of tax. So having an ISA environment, having the ability to be inside a tax wrapper can sometimes be incredibly useful for investors.
Wow, I thought there was no free lunch in finance, but apparently thanks to the UK government, there is a free lunch. Aaron, very last question in 1 minute. I think it starts next week, right? Or in 2 weeks. The new tax season. So, practically, what should they think about? Do they have to do anything before the end of the tax season? Any tips there?
Yeah, I mean, it's just really useful to understand what sort of allowances you get, and maybe if it's suitable for you to maximize your ISA allowance, whether that be in a stocks and shares ISA, whether that to be in a cash ISA, because as I mentioned, you lose anything you don't use in an ISA, your allowance. So if appropriate for you. Some people it might not be appropriate for, but if you want to invest long term, you feel that's right, or you've been recommended to do so by a financial advisor, it might be something worthwhile to make use of um, tax wrappers and gain the advantages of shielding some of your investments from high taxation potentially.
Awesome. Very, very well explained. Thanks so much, Aaron. So
All right.
now let's move on to the questions. So please, everyone, ask your questions in the Q&A and vote for the questions you want to see answered first. The questions are actually flying, which is a really, really good sign. So let's start with, is the lifetime ISA only for UK properties?
You can also use it for retirement. So properties under 450,000 pounds or less, or for retirement at 60 years plus. Otherwise, whatever you withdraw, you receive a 25% penalty, and that can actually work out you being penalised and actually losing more than you put in, because you get the 25% bonus, but then you have the 25% penalty on everything accrued. So it can be really important to really look at your time horizon and understand the rules and understand what you're using the lifetime ISA for before you actually open one up and start investing in it.
Thank you. Next question. Can you please tell us more specifically about IG Smart ISA and its past performance? What type of ISA is it?
Yeah, brilliant question. So the IG Smart ISA is the Smart Portfolio ISA, and that's a stocks and shares ISA. And it's a multi-asset portfolio which we manage based on asset allocation insights from BlackRock. We rebalance them every 3 to 6 months or so based on, we have a strategic asset allocation, but we also have a tactical asset allocation. So when we see things which are interesting in markets, we may buy something if we think it's cheap or we think there's long-term potential into it. It's a discretionary managed portfolio. And the performance has been really, really positive. So since inception, which was 2017, at the end of February, our most aggressive portfolio, which is actually called the aggressive portfolio, was up 63%, giving you a annualized return of 7.5% roughly. And it was around 15 to 20% above our benchmark, which is the Asset Risk Consultants benchmark, which is essentially a weighted average of thousands of discretionary fund managers who are submitting their portfolio performance into the benchmark. So they performed really, really well over time. We're very happy with the performance, and they're essentially a discretionary managed portfolio where investors can park their capital, and it's managed by investment professionals inside the stocks and shares ISA tax wrapper.
Nice, and well done on the performance.
Thank you.
What variables should we look at when deciding what stocks, shares, ETFs, etc. we should invest in?
So that's one which is it's going to be very tricky for me to answer because I can't give investment advice, but it's really up to your own preference in terms of what sort of stocks and shares you decide to individually buy, or ETFs. The rules that we have when we're managing the portfolios for building a robust portfolio or building a robust investment environment is to have diversification. So we're always looking at assets which are uncorrelated with each other and how they can further reduce our portfolio risk. So over the past couple of years, we've found that adding commodities in this sort of high inflation, high interest rate environment has been really useful for us because it's built the portfolios to be more robust and more perform sort of well in quite volatile climates. So having a diversified portfolio is something that we always advocate for when we manage our portfolios. But how you decide to buy stocks, funds, ETFs is entirely up to you, or up to your financial advisor as well. As long as it's in agreement.
And make sure to check Finimize and IG, because on both websites there's plenty of sort of tips and educational materials on what variables to look at exactly. What is the benefit of a cash ISA when you have a tax allowance on normal savings account interests?
So that's a very good question. So the tax allowance on just sort of earned savings for a basic rate taxpayer is £1,000. For a higher rate is 500, and if you're on additional rate, it's £0. And with today's current interest rate environment, you can easily get a easy access savings account for 4-5% a year you can get, and that can quite easily be greater than your savings allowance. So for investors who don't want to take risks in equity markets, either because they don't like the volatility or because they want something which is relatively short term, you're saving tax on the interest income that you're earning if you hold it within a cash ISA. So that's particularly useful for risk averse investors or investors who want to put savings in cash.
Thank you. Thank you so much. Can you withdraw money from your ISA whenever you want? And what kind of returns can you expect roughly from the different ISAs?
That's a good question. Yes, we can. You can withdraw for most ISAs. I mean, ISAs you have to be able to withdraw whenever, but some ISAs, such as a fixed rate cash ISAs, so like bank accounts, you have some which are easy access and some which are fixed rate. So it will fix a rate for a year. Some of those, it's important that when you open those, you read the terms and conditions and you understand what you're investing in. But some of those may have financial penalties. So if you withdraw early. But yeah, stocks and shares ISA, you can withdraw whenever you'd like. Your money isn't locked away in it, but with how most people view equity markets and equity investments is you should try and hold them for a longer time because of the volatility. So, our risk profile questionnaire, which determines suitability for client portfolios, which is a sort of robo-advisor tool, makes decisions for clients essentially based on their time horizon. And if a client needs money in 6 months or a year, you know, it's not a sensible environment to be in equities or a few stocks because of the volatility. So investors should be aware of that, and if investing in a stocks and shares ISA or in equities, potentially should have a long time horizon.
You mentioned the changes coming in the new tax year. I know this allows you to open more than one ISA within the same category per year, but does that also mean you can invest into multiple stocks and share ISAs in the same tax year now?
You can do that from next tax year, yeah. So that's the rule that Jeremy Hunt brought in. So now you can only open one stocks and shares cash ISA. So if I'd open one with IG, I wouldn't be able to open one with another provider because it's actually in the ISA declaration that you sign that you're not going to open another stocks and shares ISA, or you haven't already. But in the new tax year, that's going to be something that changes because probably people were doing it without realizing, and HMRC probably thought it'd be a good idea to allow investors to have different types of investments potentially as well within the stocks and shares ISA environment. So an individual may want a smart portfolio, sort of a discretionary managed portfolio, and then may want a ISA where they can invest in stocks and shares and sort of build a long-term stock portfolio of their own accord in there. So it's an exciting change and something which just allows investors to have more freedom, really.
Amazing. If you choose to change between ISAs, start in cash and then in stocks shares, is that possible?
Yeah, you can do an ISA transfer. So you may invest in a stocks and shares ISA for a number of years, and then your circumstances may change where you might need that money in, like, say, a year or two to buy a house, to go on holiday, to retire, whatever you wish to do with the money, and then you can transfer it to another provider. So at IG, we only offer stocks and shares ISAs in the share dealing ISA, which is essentially an ISA where you can self-manage and buy investment trusts, stocks, and ETFs, and the smart portfolio ISAs, which we manage investment portfolios inside of. But yeah, investors have the opportunity to transfer from one provider and put it and keep it in that ISA environment, but move between.
Awesome. As a pretty active trader, is there any benefit of trading outside an ISA?
I can't really talk too much about trading. I can't really give sort of investment advice on sort of trading or buying stocks and that kind of stuff.
Okay. Can you open an ISA if you don't live in the UK or Europe?
So that's a really good question. So the ISA is only open to UK residents. So if you've actually moved outside of the UK, you might not be able to open one. There are some very, very strict guidelines about who can open ISAs. It's mainly for UK citizens, people who live in the UK to benefit. So if you're living in continental Europe, unfortunately, you won't be able to open one.
That being said, I think check because it might not be called an ISA and it might be slightly different, but there's probably some sort of accounts that allow some tax benefits. So make sure to check as well what's available in your country, because maybe there is something. How to find ISA accounts or figure out which one is suitable for me?
Yeah, really good question. The sort of Google searches may provide reputable investment providers where clients can sort of look and or investors can make their sort of own decision based on how they see fit, really. But that decision should be up to them, whether it's sort of a cash product they're looking for, whether it's a stocks and shares product, or whether it's a managed portfolio service. And those should be answered also within accordance of what is my time horizon, when do I need this money, would I be happy if this portfolio fell 20, 30, 40%? Those are the questions which are really, really crucial to determining any investment decision for an individual. So those should be answered first, and then people can sort of do their research on various different websites, providers, and go from there, really.
If I put 20K in UK stocks and shares, the answer just disappeared. Wait, the question just disappeared. 1 second. I just need to find it again. If I put 20K in UK stocks and shares ISA and it gives me 5K gross within a year, will I get taxed on that, or the whole 25K, or not at all? I think Sam will love the answer to that question.
So yeah, no tax at all. So at the moment, the UK, it's changing the next tax year. You have £6,000 you can make in capital gains before you have to pay any capital gains tax. But in the ISA environment, you can make infinite capital gains and you won't be taxed. It's a really, really nice environment to be in if you're making big capital gains or you have large dividends, because it's an environment where there isn't any tax, and an environment where the UK government wants people to save, really.
Awesome. Aaron, get your elevator pitch ready, because the next question is, what's the difference between the different providers in terms of ISA? Why choose IG and not another one?
Yeah, that's a great question. So I mean, the beauty of the IG ISA is in the smart portfolio ISAs, the smart ISAs, you have access to investment professionals who are managing your portfolios across different risk ranges. So you'll be recommended a risk rated portfolio based on your risk tolerance and based on your capacity for loss, based on a questionnaire which has been built by one of our actuarial providers. And the returns have been very impressive, and it's sort of a tool where you can invest and you don't have to worry too much about it. We sort of take on all the investing for you and keep you informed on what investment changes we're making, and our outlook, and what investment opportunities we've seen and taken advantage of. And the stocks and shares ISA is just a very, very good value proposition where you can buy many different stocks and shares, funds, ETFs, and it's a really, really attractive environment for investors to potentially self-make their own investment portfolios across ETFs, investment trusts, and things such as that. And what's also useful is if you put £15,000 in a smart portfolio, you don't actually have a custody charge on a stocks and shares ISA. On a share dealing, with IG. So that's also really, really useful.
Nice. So we cannot open more than one ISA profile from different platforms.
Within the same tax year at present, you can only open one stocks and shares ISA or one cash ISA. But in theory, at the moment, you could have opened one with one platform, and then in the next tax year, you might think, I don't really like this one, I'm going to open one with another provider. And as long as that was done in 2 tax years, in previous tax years, that would have been within accordance of ISA legislation.
And the last question, as an active investor / trader, how important is the flexible ISA? What are the major benefits to someone who is more active?
Yeah, that's a good question. It's just the flexible ISA. What's the most useful benefit is just this flexibility idea. So you can replenish money that's taken out. So whatever it's for outside the ISA, as long as you put the money back in that same tax year, that's what's sort of most useful about it. So you might see something outside of your ISA that you might have a financial requirement, or you might see something that you want to invest in which isn't possible out in the ISA wrapper, and it's useful because then the money can be replenished inside the ISA within the tax year, and you're not losing anything. So you might have fully put your money in the ISA already, but it can be replenished as long as it's within the same tax year.
Well, thank you so much, Aaron. Honestly, I was so useful, so informative, learned so much today. And your answers are so punchy and to the point. I'm sure absolutely everyone loved that. So unfortunately, that's all the time we have today. But thank you so much for joining us. Thanks, Aaron. Thanks, everyone, for watching or listening in. Hopefully, this has been really useful to you. Tomorrow, please join my colleague Reda for the second event in this series, where he'll be guiding you through how to become an ISA millionaire. Just that. So, I don't think you want to miss that. And as you leave the event today, there is going to be a pop-up survey that should appear on your screen. Please take a few minutes to let us know what topics you're interested in hearing about at future events. Once again, Aaron, that was a fantastic. Was really good to have you. Fantastic. Have a good end of the day, beginning of the day, beginning of the night, depending on where you are. I don't know, but thank you so much, and see you hopefully tomorrow.
Thank you for having me. Take care.